income projection for SCHD. I look at all these numbers and I checked, even if you invested $100,000, you're only going to get 3,407 annually. And let's go all the way to 300,000, you're going to get only $10,000, 221. If you invest 500,000, that's $500,000. You're still going to get only $17,000, 35. So then I thought, who in their right mind would want to invest in this type of ETF? I mean, there must be some secret to it. And that's kind of things I really wanted to dig deeper in this video to see the secret why this fund is very successful or has been very successful for many years. All those numbers, what I did on average, after split, you're going to get 24 cents per share. This is average distribution according to how much they've paid a year. And you look at current price would be, as of today, it would have been after split, which is going to be in like 10 days. And that will be only $28.18. Annual as of now is about 3.5, but I just put 3% just because I went with average. So now, and that's the numbers I get. You know, of course, you're going to get a lot of shares after split. But the real other numbers that I have that are very, very important are these ones here, guys. If you look at these numbers, these are all the dividend that they've paid from 2011 all the way to 2023. So those are more than 15 years. So it's a good number of years to have the record. So if we look at the compounding annual growth rate for dividend is about 11.92. So we can round up to 12%. That is very significant. Before I show the actual secret why people are very drawn to this fund, I just want to show you what this fund is for people who are new to this type of fund that I'm talking about today, which is SCHD. If we go to Schwab US Dividend Equity ETF, this is a Schwab website. We can see the summary of this fund. Objective of this fund is to track closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 index. So this is like 100, the NASDAQ 100, but instead of the NASDAQ, which is a tech-heavy stocks, this is just more of like a Dow Jones, which is more of like industrial, sturdy, early companies. And of course, what they are doing is invest in those companies that are very, sturdy, and they've been growing their dividends. So they pick those stocks and they invest directly. This is not synthetic ETF like YMAX or Roundhill. And as the price of today is 84.33, the fund has a lot of money. If you look at the total expense ratio, is very low. It's only 0.06. Dividend yield as of today is 3.63. The main key factor of this fund is that it has returned a lot. Has returned about over 14%. This is actually has beaten even the S&P 500 within many, many years. This is more than 10 years has returned that much. Right. If you look at the portfolio composition, is you can see here there's Home Depot, there's Verizon, Cisco. So they are very good and steady companies. And asset allocation, 100% of this is stocks, and the biggest portion of this is financials, because most financial, of course, they pay dividends. You can see there's very little in technology, which is information technology is only 8%. But the most weight on this one is financial, healthcare, and consumer staples. Distribution history, they've been paying for many years. And as we can see here, they don't pay consistently every quarter. At the end of the day, there's a growth, as I've shown you on that chart. In 2011, they only paid 12 cents, right? In 2012, they paid 81. It keeps going up, right? And then, for example, in 2022, they only pay $2.56, but in 2023 they pay $2.60. So there is growth of this, and this is a big thing to watch. If you invested only $50,000 in this ETF, no monthly contribution after that, I'm going to show you how much you're going to have within a certain number of years. Annual dividend as of today, I just calculated about 3%, and this is just, let's say, the average. Annual dividend growth rate is 12%, and share price within 10 years has been returning about $13.39. Right, and number of years you invest is 25 years, but we will lower these years as we add more money here. And maximum dividend, let's say 3%, right? I can put 3.5, but to simplify things, I'll just put 3%. So now check this. If you invest that amount of money within 10 years, just $50,000, right? Within 10 years, your money is not going to be bigger but your income you'll be receiving, you're going to be receiving this. This is the total dividend you're going to be receiving, and this is the annual dividend. So within 10 years, you'll be receiving about 5,000, and total dividend you've received is 27,000, and your portfolio is only going to be close to 200,000, right? That you haven't added anything. Now, just leave that money grow and let it compound. Check this out. 10 more years after that, you are closer to $1 million, and at that point, you're getting $19,000 annually, right? So your portfolio is 19,000. I mean, it's almost close to 100. I mean, 1 million, and you're getting almost 20,000. Not quite yet, but if you leave that money grow for 5 more years, your portfolio is going to be almost 2 million. It's going to be 1,816,000, right? So, and then at that point, you'll be receiving 38,000 annually. That's the main thing about this fund, guys. So it's not, it's really designed for people who want to invest their money and let their money grow for a long time. But if you want to change that, what you can do, you can add some money here. For example, if you put let's say 600 every month, just 600, or let's do 500. If you do 500 every month, you add to your $50,000 from what you've been your capital. Your first amount of put is $50,000. Now every month you put $500 using the same math, right? And if we recalculate that, now within only 18 years, you'll be a millionaire, and at that point you'll be receiving $26,000 annually. So of course, if you want a month, you can divide that by 12, right? By your portfolio, now you're a millionaire. So you can actually draw from your portfolio if you want to. But we can also go further. Let's say, for example, you invest $100,000 there, and then let's say you put 500. If you do that, then you shorten your time. You're going to be a millionaire within only 15 years. So it all depends on how much you want to start investing and how much you're willing to add and how long you're willing to invest. You are an investor who's younger and you want to let your money grow for a long time. This is the kind of fund you want to invest your money, and you just let the time grow. The more money you put here, of course, the less the time you have for you to retire, or you can put less money here, but you put a lot of money on monthly basis. For example, if you put $1,000 here, let's see how much that's going to change, right? And you put 100,000 and you put 1,000 every month. Guess what? If you have that much money, right, you're going to be a millionaire within only 13 years. So guys, that's a big secret I just want to reveal to you. Why people are drawn in this fund. The main reason is because this fund has a growth rate of about, in terms of their dividend, about 12%, and has grown about 13% annual return on your portfolio. So if you are an investor who is willing to wait, or investor who wants to put their money and let the compound work for you, this is a fund for you. And after split, this fund is going to be cheaper, so you'll be able to buy with very little money to start with. So thank you very much for watching. If you like this video, just make sure you give me a like, and if you find a very value in this video, make sure you share with someone who this video can help. Thank you very much. Bye bye.